Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks and finance to help you make informed decisions about your investments. I'm your host, Lewis, and I'm excited to have you join us today. As we navigate the complex landscape of the stock market, it's essential to stay up to date on the latest news and trends. And that's exactly what we'll be doing on today's show. We'll be discussing the recent developments in the Indian equity markets, including the upcoming holidays in October 2025. According to the official holiday calendar released by the NSE and BSE, trading across equity, commodity, and currency segments will remain suspended on three occasions: October 2nd, October 2020, and October 22. These holidays coincide with significant events such as Mahatma Gandhi Jayanti, Dussehra, Diwali Lakshmi Pujan, and Bali Pratipada. It's worth noting that a special Muhurat trading session will be held on Diwali, which is considered an auspicious time for new investments. This one-hour trading window will take place on October 21 from 1045 p.m. to 2045 p.m., allowing investors to modify their trades until 2055 p.m. We'll also be taking a closer look at the Fabtech Technologies IPO, which has been making headlines in recent days. The company's IPO subscription status, price band, and timeline are all crucial factors that investors should consider before making a decision. As we explore these topics, we'll aim to provide you with a balanced view of the market, highlighting both the opportunities and risks associated with investing in the stock market. Our goal is to empower you with the knowledge and insights you need to make informed decisions about your investments. So, whether you're a seasoned investor or just starting out, tune in as we delve into the world of stocks and finance on the Riskwiser Zone. We'll be discussing the latest news, trends, and analysis to help you navigate the complex landscape of the stock market. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into the world of cryptocurrency and exploring some interesting developments in the space. Today, we're looking at the concept of Bitcoin treasury companies and the metrics used to evaluate their performance. Recently, NIDIG called for these companies to drop the misleading metric known as market capitalization to net asset value, or MNAV. This metric is commonly used to measure the value of a company's cryptocurrency holdings relative to its market capitalization. However, NYDIG argues that it fails to account for operating businesses or other assets that a company may own, and can also be influenced by assumed shares outstanding, including convertible debt that hasn't met conversion conditions. To break it down further, let's consider the example of Metaplanet, a Bitcoin treasury company that holds over 25,000 BTC. While its share price has struggled, its MNAV has dropped significantly, from 844 in June to 1.12 currently. This raises questions about the accuracy of using MNAV as a key performance indicator for these companies. On the other hand, some argue that MNAV can still be a useful metric for investors, as it provides a snapshot of a company's cryptocurrency holdings relative to its market value. However, it's essential to consider the limitations and potential biases of this metric, especially when evaluating the performance of Bitcoin treasury companies. As we continue to navigate the complex world of cryptocurrency, it's crucial to stay informed about the latest developments and trends. The call to drop MNAV as a metric is sparking an important conversation about how to accurately evaluate the performance of Bitcoin treasury companies. In conclusion, the debate surrounding MNAV highlights the need for transparency and accurate reporting in the cryptocurrency space. As investors and stakeholders, it's essential to be aware of these discussions and consider multiple perspectives when making informed decisions. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the closing segment of the Riskwiser Zone. As we wrap up today's discussions on market trends and leadership changes, I'd like to shift our focus to two key players in the beverage industry, Molson Coors Beverage Company and Monster Beverage Corporation. Both companies have been making headlines with their strategic moves and impressive sales figures. Let's start with Molson Coors Beverage Company, which recently announced that Rahul Goyal will be taking over as CEO, effective October 1st. Goyal's Beyond Beer strategy has been instrumental in expanding the company's portfolio beyond traditional beer into non-alcoholic beverages and energy drinks. This move is a clear attempt to counter declining beer consumption and tap into evolving consumer preferences. While the company's recent results show a decline in net sales, driven by softer volumes in the Americas and EMEA regions, its investments in modernizing North American breweries and maintaining strong cash flow management are noteworthy. As we consider Molson Coors as an investment opportunity, it's essential to weigh the potential benefits against the challenges posed by market pressures. On the other hand, Monster Beverage Corporation has been making waves with its record-breaking Q2 sales of over $2 billion, driven primarily by the strong demand for its energy drinks. The company's ability to innovate and launch new products, such as Monster Energy Ultra Blue Hawaiian, has been a key factor in its success. Moreover, its global expansion efforts have yielded impressive results, particularly in Europe, the Middle East, and Africa. However, it's worth noting that the company's alcohol brands segment experienced an 8.6% sales decline, which partially offset the gains from energy drinks. As we evaluate Monster Beverage Corporation as an investment opportunity, we must consider both the potential for growth and the challenges posed by increasing costs and pricing dynamics. As we conclude today's Riskwiser Zone, I'd like to emphasize the importance of maintaining a balanced perspective when evaluating investment opportunities. While both Molson Coors Beverage Company and Monster Beverage Corporation have shown promise, it's crucial to weigh their potential against the risks and challenges they face. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, invest with caution. Always keep in mind that market trends can shift quickly, and it's essential to stay informed and adapt your investment strategies accordingly. Until we meet again, stay wise and happy investing. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.